Home improvement loans are a great way to upgrade your living space without breaking the bank. With these loans, you can finance your home renovation project and make your dream home a reality. But are home improvement loans a good idea? In this blog, we'll now explore the benefits and drawbacks of home improvement loans and help you decide whether they are the right choice for your home renovation needs. Whether you're looking to remodel your kitchen, add a new bathroom, or install energy-efficient windows, this guide will help provide you with the information needed to decide whether a home improvement loan is the best route for you. Are home improvement loans a good idea? If you're considering renovating your home, this question might be on your mind. Home improvement loans can be a great way to finance your renovation project, but they also come with risks. In this blog post, we'll explore the pros and cons of home improvement loans and help you decide whether they are a good idea for you. Pros of home improvement loans. Low interest rates. Home improvement loans often have lower interest rates than other types of loans, such as personal loans or credit cards. This is because the loan is secured against your home, which reduces the lender's risk. Flexible repayment terms. Home improvement loans typically offer flexible repayment terms, making them more affordable. You can choose the loan length and the monthly payment amount to fit your budget. Increased home value. One of the most significant benefits of a home improvement loan is that it can increase the value of your home. By making improvements, you can increase the resale value of your property, which can be beneficial if you plan to sell in the future. Tax deductions. Sometimes, the interest on your home improvement loan may be tax deductible. This can reduce the overall cost of the loan. Cons of home improvement loans. Risk of foreclosure. Home improvement loans are secured against your home, which means that if you default on the mortgage loan, the lender can foreclose on your property. This can be a risk if you cannot make your loan payments. Additional debt. Taking out a home improvement loan means taking on additional debt. If you need help managing your finances or have other debt obligations, this can be a concern. Hidden costs. Home improvement loans may come with hidden costs, such as origination fees or prepayment penalties. Also, read the fine print before you sign up for a loan. Over-improvement. Over-improvement is a risk with any home renovation project, but it's particularly relevant when taking out a loan. If you over-improve your home, you may need help to recoup the amount spent on the improvements when you sell your property. Is a home improvement loan a good idea? Whether a home improvement loan is a good idea for you will depend on your individual circumstances. Here are some factors to consider. Your credit score. You'll typically need a good credit score to qualify for a home improvement loan with a low interest rate. If your credit score is low, you may not qualify for a loan or be offered a loan with a higher interest rate. Your budget. Before you take out a loan for home improvement, be sure to have a clear idea of your budget. You'll need to be able to afford the monthly loan payments and any other costs associated with your renovation project. The value of your home. The value of your home will determine how much you can borrow and whether it's worth taking out a loan. If you have plans to sell your home soon, it's essential to consider whether the cost of the improvements will be recouped in the sale price. Your future plans. A home improvement loan may be a good investment if you plan to stay in your home long term. However, if you are still determining if you'll reside in the home for an extended time, getting the loan may not be a good idea. Conclusion. In conclusion, home improvement loans can be a good idea for some homeowners, but they are more than one-size-fits-all solutions. It's important to carefully consider your financial situation, the value of your home, and your future plans before taking out a loan. While home improvement loans offer low interest rates and flexible repayment terms, they also come with the risk of foreclosure, additional debt, hidden costs, and over-improvement. If you decide to take out a home improvement loan, shop around for the best rates and terms. Consider working with a reputable lender and read the fine print carefully before you sign on the dotted line. Thanks for watching. Learn more at homeimprovement89.com. Click link below.